All right, folks, so welcome to today's video. Today we're going to be going over the 10 reasons why you might not be able to be profitably trading. And we're going to go over some of the biggest mistakes that most common traders today, even myself, have faced, and how I was able to rehabilitate my personality in trading to start becoming profitable. But anyway, I hope you guys enjoyed this video. Go ahead and leave us a like if you've enjoyed it, and let's go ahead and hop into this video. All right, everybody. So let's go ahead and start with our presentation and some of the reasons why you may not be a profitable trader quite yet. So number one is being impatient. All right. So it's consistently looking for risky setups. You're just trying to look for a reason to get involved and kind of just hopping into low quality setups. And so many people find themselves being patient when they're trading to rebound from a previous loss. I found myself to be doing that even during my Forex funds evaluation, where I would be up 3% and I would lose, let's say, 1%, and I would risk my other 2% in profit in order to just rebound on the 1% loss. So after a certain point, you have to be patient with yourself, and you also have to be patient for the market in order for you to find yourself in a favorable setup. All right, so number two is going to be using the wrong time frames. Many traders tend to just focus on a single time frame, which hinders their trading strategy because you may be going against a higher time frame confluence or a higher time frame trend. And if you're not performing these top-down analysis where you're analyzing each time frame, like the daily and the 4 hour and the weekly and the 1 hour and the 15 minute, you're going to be focused. And if you're only focusing on one time frame, you're going to end up missing the big picture of things, and you're going to end up having more losses than you will wins. All right, number three is going to be physically unhealthy. Now, I don't mean if you're overweight or if you're too skinny. That's not what I mean at all, because many traders that I see who are overweight and who are maybe very lean are profitable, and they just have to find the balance of focusing on themselves outside of trading. Um, and this comes in the form of eating a mindful breakfast that will bring that energy when you're trying to focus in sessions, and having a proper sleep cycle is by far one of the most important parts to being physically healthy, because I found myself to be going to sleep at 2 or 3 in the morning, and then waking up at 8 a.m. 30 minutes before the market opened, and then doing absolutely horrible. So this is one of my personal examples of 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 maintaining that physical your physical self, and making sure you eat the proper meals that contain real nutrients, and finding that stable sleep cycle. So number four is going to be mentally unhealthy. This comes in the form of frustration or anger, and can kind of lead you to take trading in a whole different dark manner. But this is my personal focus throughout any trading week, because making sure you're mentally ready for a trading session that consists of being focused and disconnected from the outside worries is a must in trading. You must be able to dial in and focus in any trading session in order to come out with a profit. So make sure you're not too hard on yourself for previous trading decisions. You must be able to accept your previous mistakes and adjust, because if you're just too hard on yourself and you're too focused on these previous mistakes, you're going to lose yourself. You're going to lose your focus on the overall big picture in trading. So making sure to clear your conscience is really a big thing. I take the first hour or the hour before the trading session to really just recoup, to focus, to get my body, my mind right. And I think that's a huge thing that many traders don't focus on, is they just hop right into a session, or kind of just not focus on themselves, and they end up in these situations where they're blowing their accounts. And you must have to be able to be mentally focused. And if you're frustrated, or if you're angry, or if something major has happened in your life, you have to take the time, and you must be responsible to just take a day off, or take an extended period of time off. But don't worry about trades. This is my last bullet point here. You must be able to stick to a tight script. that you must not be able to deviate from. And this is why being mentally healthy is one of the strongest characteristics you can have as a trader, because if you're mentally healthy and if you're patient, and if you're focused, and if you're not worried about your trades, you tend to stick to your trading strategy, and that's going to bring out way more profitability in the long run. If you're unhealthy mentally. So number 5 is going to be poor trading strategy. Many traders will select a trading strategy that their mentor has proven to be profitable, right? However, many students find themselves to be unsuccessful because their mentor's trading strategy simply does not meet the criteria of their personality. And so it's really, really important before you buy any course or before you apply any concepts that you revise the strengths and weaknesses of yourself and of your trading tendencies in order to properly identify a profitable trading strategy that is fit for you. And many traders will begin to trade with a new strategy. However, they just don't spend the time backtesting the strategy in a real world market setting, right? They see these traders on YouTube who are making millions of dollars and who are hitting 1 to 20 RR, and they just hop in right away trying to see if it works, and then they find themselves consistently losing their money because they just don't take the time to backtest these concepts and strategies, or learning it. You have to spend a lot of time learning the strategy, and then you have to take a lot more time to backtest that data in order to prove that it's going to work within your trading style and your strategy. So number 6 is not being dedicated, right? So many traders will find themselves using trading as a hobby, or they'll spend 30 minutes a week or 1 hour a week trying to improve, and which is fine. But if you're not fully committing yourselves to the art of trading, it's going to take years and years and years in order for you to find some type of profitability in the market. I remember talking to somebody in one of my Discord trading groups who was not profitable for 10 years. He's been trading on and off for 10 years and was consistently losing year over year until this past year, where he put in the time and he put in the effort into changing the way he looked at things and was finding himself to be profitable. So ask yourself if you're willing to learn and put aside certain activities and hobbies for an extended amount of time in order to properly maintain themselves in the future. And by this, I mean maintain your dedication both in the present and in the future. So continuously not progressing your strategy and concepts is one of the hallmarks to unsuccessful traders. Many believe their strategy works. However, they don't take the time to learn past that, or even apply this to real world market data by backtesting these strategies. And so they find themselves consistently frustrated. Even a close personal friend of mine has been just not dedicated. He hasn't spent the time to successfully applying these concepts in the real world market, and he lost thousands of dollars, and he's spending all this money because he thinks it works, but he doesn't spend the time to backtest it and to apply his knowledge into the real world market setting. Number 7 is going to be poor trading psychology. Now, many traders try to tell the market what to do, and you're just going to find yourselves being beat up by this. The art of trading is built around reacting to the market conditions, because we can't tell the market what to do. We can't be hopeful that the market will go in a certain way. You just have to react to the market, right? Another reason for poor trading psychology includes not reviewing past trades. As a trader, you must be able to identify the strengths and weaknesses of any trade. And you can do this by keeping a trading journal and reviewing all those trades that you took, figuring out why a certain trade didn't work out the way it was. But I see many traders having some of the worst trading psychology because they just don't review trades. They just look to the future, look for their next setup, and just hoping that they'll win and rebound. So the last bullet point I have on here is just unable to figure out losing trades. This kind of rubs off of keeping a trading journal. Earlier in my own trading career, I found myself unable to adjust with my losing trades because I simply did not look to improve on my mistakes. And this cost me in the long run. It cost me many weeks and many months of frustration because I simply would not keep a trading journal, and I would just not focus on my losing or even my winning trades because I would just look for the next opportunity. So you got to make sure that you're spending enough time reviewing your trades and reviewing why certain setups just didn't work the way they did, and why some did, right? So make sure you keep a trading journal. Make sure you're reviewing your past trades. Number 8 is giving up when times become difficult. And believe me, every single trader that is out there trading in the markets has had times when they've wanted to give up, and has had times where it's been so frustrating and so emotionally distraught where they just want to give up, right? But this is what 90% of traders do, is they quit, right? They quit within the first few months of learning to trade because they're not finding success. They're not applying themselves. They're not having that mindset of being able to do more than what the 90% of people in the markets are willing to do. You have to be able to ask yourself, what are the extents I'm willing to go in order to actually make it in this industry? What am I willing to give up in order to properly focus on the foreign exchange market in order to be successful? And wanting to give up, let me tell you, it's perfectly normal. I've had it many times. I've cried many times because I've blown accounts, and I've blown actual live accounts with prop firms. But just do not give up. It's not an option if you're wanting to make it in this industry. Taking breaks to resettle is such a better method to relieve the stress that the markets bring on us. Taking that time with family or with maybe a different hobby that really takes your mind off the markets, and this kind of gives you the time and to refocus, to reestablish your goals, and to just dedicate yourself into the future. So let's go ahead and go to number 9, which is trading with cash right away. This is a huge psychological mistake, right? Because when you're trading with your own capital, there is such a huge psychological connection with your own cash, because people will tend to view losses as a $20 bill ripped right out of their wallet and they're not getting it back, right? And so many traders will close trades early because they'll have a decent profit, and they'll just take it out right out of the market when the market gets choppy, or when it's not impulsively moving up or down. Or if they're even in drawdown, traders will tend to close their trades early because it's not immediately in profit. So this creates a very impulsive tendency and will cause you to deviate from your trading strategy. And that's one of the biggest mistakes you can do is deviating from a strategy that you are implementing into the market. So many traders will tend to create a profitable strategy. However, many traders will either demo trade for a very small amount of time, or they will begin to trade with actual cash in the real-time markets right away once they figure out their mentor's big secret or their big trading strategy. They'll put $100 or they'll put $1,000 or even maybe $10,000 into the market, and they'll blow their account, right? It's a huge mistake. You only actually want to begin trading with cash if it's a small amount of capital, and if you are fully willing to lose that amount of money, right? And that goes without saying that you've taken the time on demo and taken the time learning these concepts and applying them through back testing. But my personal suggestion is to demo trade for at least 30 to 60 days while applying your strategy, analyzing your results, and seeing if it's profitable. Trading with a live account, I mean, it's a huge responsibility, right? And the best and cheapest option to trading with a large amount of capital is through prop trading, right? Prop trading firms allow you to go through a 2-stage process exam where you try to prove your capabilities as a trader. And if you pass their criteria, you get funded with $10,000 or $20,000, $50,000, $100,000, $200,000, $300,000, right? So this is what my own personal suggestion, because you're not risking your own capital, right? You're trading a company's capital, and they're splitting that profit with you to no risk to you, right? If you are trading with a prop firm's $10,000 account, and you lose $1,200, you don't lose a cent, right? I've lost or I've blown live accounts with my Forex funds, losing $1,200, and I didn't have to pay a cent, right? I only had to pay the $70 to take the actual exam itself, and that's all I lost. And when you are actually when you pass those tests, you actually get that money back that you put up to take the exam. So that's number 9. Let's go ahead and go to our last slide, which is improperly applying your strategy. So many traders will begin to take parts of multiple strategies in order to kind of formulate their own unique and profitable strategy, which is a very great method. However, it's how much time you are applying this to backtesting and reviewing historical market data, which is going to make the difference. Because how do you know that you will be profitable with it, with the strategy, if it does not fit your personal style? Um, you got to ask yourself these questions in order to figure out what type of trading strategy fits your personality. And if you are spending enough time analyzing your strategy to the real world market data, right? So you need to ask yourself, what type of trader do I want to be? Do I want to be holding trades for, a week or two or even months? Or do I want to be holding trades for 60 seconds or minutes or, for half the day or for an hour? You have to ask yourself these questions in order to figure out what type of personality that you have. And so that's going to be actually our next video, is analyzing what type of trading personality you have. And I hope you guys do stick around for that next video, because it's going to be very interesting. It's something that not a lot of traders actually focus on, because they focus on what their mentor has been successful with, making all these millions of dollars. Well, guess what? If it doesn't fit your personality, how are you going to expect to make any money in the market using that strategy, right? So you got to ask yourself, what type of strategy fits my personality, right? So many traders must be able to use all of their learned concepts in order to fulfill a profitable script, right? This includes applying a top-down analysis on all time frames, and finding an applicable setup on the lower time frames. You have to, in terms, take everything that you've learned about backtesting, everything you've learned from your mentor, and combining it all together into your trading strategy to make it profitable and to be able to adapt to real-time markets. But anyway, that's going to do it for this video. We really do hope that this helped. This was just a beginning video. We will be going over some more reasons why many traders aren't profitable. But this is actually some of the reasons, or some of the examples from my own personal life that I found to be a huge weakness that was keeping me from being profitable. But I hope you guys really enjoyed the video. If you guys have any comments, go ahead. Reach out to me through Discord. Reach out to me through the comment section. The link to our Discord is going to be in the comment or in the description below. We have a nice, very lovely group of about 50 traders, intermediate traders who are looking to get funded. But we really do hope that this helped you guys, and we will see you in the next video.